Okay, there we go. What's up, guys? How's it going? How is everybody doing? I just said hi. That's all I said. I said it was 2:06 p.m. New York time on Thursday, but it took me a second to recognize whether it was to figure out whether it was Thursday or Friday. You just lose track of time when you're old. When you're my age and you're have been around since the dinosaurs were here. So what's going on, everybody? Have a few people here. Not enough likes yet, though. So I'm pretty blunt when it comes to the likes, and what we want to do is get the likes up as high as possible because we want to continue to bring you these streams. We want to continue to be one of the leaders in terms of crypto market analysis and trading and investment education. And we think that there's a lot of garbage in the YouTube space. So to get ourselves prioritized in terms of being favored by YouTube, we need to have a lot of likes. And right now we have a substantial amount of viewers, but we don't have enough likes. The like to viewer ratio is looking really poor. And if you're watching this, you should definitely be liking this. Like I said one other time, our like ratio right now it's about the same as the gold silver parity. Okay, our viewers are at gold and our likes are less than silver right now. So we need that to we need that relationship to be bridged a little bit closer. And we'll get started in a moment or two. So I have this new setup. As you can tell, I hope that you like it. It's a little bit cleaner, I think, than just busting out the stream and using OBS and just have the window and me. I figured I would jazz it up a little bit. I really enjoy doing this. I enjoy doing this frequently. It turns out I enjoy doing this more frequently than I anticipated. I only thought that I was going to do this originally 1 day a week and then 2 days a week, and then Crypto and Coffee is every Monday, Wednesday, and Friday. And I have a decent amount of free time between things that do occupy my time. And I think that one of the things that I really want to accomplish, one of the things that we really want to accomplish with BlockRoots, is to really grow in the space, and again, to be your primary source of crypto and crypto market analysis, right? Obviously, we touch on traditional markets and what goes on in legacy markets, but we want to be your primary educator in the crypto markets. And I have this really big screen in front of me right now, and I'm constantly looking over at the OBS, and I'm forgetting to address the camera. So it's really important when you're talking to someone that you talk to them by looking them in the eye. It's not too long, though. It's really important to have breaks as well, because we don't need to be staring at people like we're a sociopath. But yeah, that being said, I really like doing these videos. And what are there, 168 hours in the week? I think that we could fit in 5 live streams a week, right? So instead of doing the crypto and coffee on those 3 dedicated days, we'll always do them on those 3 dedicated days. So every Monday, Wednesday, and Friday, we'll do it at 9 a.m. Eastern Standard Time. That's 13 UTC. And then we'll fit in 2 sort of more random thrown together streams in the time between, whenever I could fit it into my busy schedule, which is not too busy whatsoever. I don't go out anymore. My wife and I, we go out to eat a lot, but we don't have buzzing social lives. We spend most of our time doing what we love the most. And, for me, a lot of that involves being in the market. She is, thank God, she has a pretty time-consuming hobby with all the horses and needed to constantly take care of them. So that's what she's doing right now. She is outside with her mother, feeding the horses buckets. So buckets does not just mean feeding the horses hay. It's this mixture of what I can only describe as probably the worst type of oatmeal in the world, and water. And it looks like slop and it sounds like slop. And when you have horses, obviously you have to give them more than just hay, because it's got to be really boring. You're eating a bunch of straw, right? So she is going to be busy for the next hour and a half, and I'm more than happy to throw together a stream. And I wanted to try this new stream format and see how you guys feel about this. So I have a decent amount of likes, I think we have a decent amount of likes right now. I have plenty of comments, so I'm going to make sure that I keep up with those. So we have to scroll down on this and make sure that I'm constantly at the more recent of the comments and questions. I am hooked, you could say. What's going on, everybody? Let me go say hi to everybody. Ben was the first person to jump in. He jumped in like 2 hours ago, so good for you, Ben. What is the saying? The early bird gets the worm. But my favorite saying is early bird gets the worm, the second mouse gets the cheese. If you get that. It's not my favorite saying, but I do find it pretty humorous. JE, what's going on, buddy? What must I do for a free membership? Well, JE, we're going to be doing a lot of giveaways, so hopefully you are on the right end of that. Although I will say, I don't remember who won yesterday, but I rewarded 5 people with free memberships, and I only had one person get back to me. It was Pascal. So go to the video where I said I was giving away the membership and check your comment, because it might be the case that you're one of the people that won and you just didn't recognize it. So David, okay, dollar inverse correlation. Okay, Julian, what's going on? Maven, okay, Cornholio. I think you won too, Cornholio. Gerald, D. Ross, what's going on? Always a pleasure. Ripcord, Math Max, okay. Let's see. Hey, Math Max, do me a favor. I know that we're probably cool because we are on a YouTube, but no one's really on a last name basis with me yet. So referring to me as Mr. Sparrow reminds me of the way that maybe my dad or my grandfather referred to. And yeah, I'm going to try to keep it on a first name basis. So you could call me Ryan or you could call me Clark. Okay, potential elections. All right. And here we go again. And only say that because I don't necessarily need, the entire world being privy to my, last name and have someone show up at my front door because they're upset that, I shit on their altcoin. Pascal, what's going on, buddy? You won. All right. Freddie, Julin, Keld, what's going on, pal? Okay, Canada 10 hitting the gym. Dot going to Goblin Town. Goblin Town, what is that? Going to hell? Going to hell. Maybe that's what Goblin Town is. And a lot of things are. So actually Dot is. So that makes a lot of sense. Can't hear. Hey, no sound, no audio, no sound. Oh, wait. There it is. Okay, here we go. Okay. I'm making sure because I'm going through the comments now. And I'm like, oh, no. Still no sound. Got to redo this whole thing. Okay. Hey, Ryan, what's going on? Mustafa, X Factor, B-Town, Sigmar, T-King, Crypto Cred. What's going on, buddy? Wow, and I thought my guilt trips were bad. Okay. You have a point towards the button to tell people to like and subscribe. Well, you know what? I'm not really, I'm not exactly the most YouTube, I'm not versed in the YouTube arts yet. Let's just put it that way. Doing this felt like, a school science fair project in an area that I was just throwing together the night before. So I'm trying to create improvements, and these are very superficial. Once we figure out some more, widgets, then maybe I'll have those special buttons. But the one thing that I really want to deliver on is the function over the form. Brendan, okay, D. Ross. Okay, Crypto Cred is joining us again, and as you guys have known now, let's all shout out to Crypto Cred, because for the last 2 weeks, whenever I've been recognizing people who live stream on YouTube, Cred and the Technical Roundup crew, Cred and Don Alt, are the only people that I will say are great sources of non-sensational and very educational information on YouTube. So take over the world, right? Or at least take over this pocket of crap. Okay, X Factor, JE, Sweet Canary. Sweet Canary, I think that you won as well. So go through the comments. Rick Stein, Randall. Okay, good amount of people. I'm just making sure that I say hi to everybody. Jake, Michael Williams. All right, now we're getting a little redundant. Okay. All right, so I think we have an adequate amount of people, good amount of likes. We're about 2/3 of the amount of viewers. All right, so now let's see if I could have this seamless transition to what I want to go to next, which is the live screen. And we're going to get rid of this in a moment. Make sure that I have everything up that I need to have up. All right, and now we are, bang, good. All right. So I have this weird template, on the exterior of the chart that you're looking at, and it's just it's a gamer template. So I don't play. I just started playing video games again during the coronavirus, right? During the pandemic, as everyone was sort of confined to their living room in their home. I picked up video games again, and I actually really enjoy them. And it's funny that it's funny because video games are, I think that. People talk about video games if it's a childish thing to do and play video games, but there's a popular trading firm here in New York City that one of their questions for their potential job candidates or potential prop traders is, do you play video games? Okay. Now, obviously, I'm sure that you could figure out just from operating on a trading interface what maybe some of the parallels and benefits of having quick reaction times and maybe an attention to detail, or just sort of the gamification of trading, how that would benefit from someone, or rather how someone maybe who is good at playing games would excel at trading. So it's interesting, right? But I started playing Call of Duty. So I'm 35 and I started playing video games again, but I don't really have anyone to tell me what to do. So it is what it is, and I really enjoy it, right? But so either way, all right, let's get into a few things. There's a few things that I want to talk about. We're going to keep up the Phemex trading competition still. So I want to, whenever opportunities arise during the streams, be able to take these trades. Doing well for the large account balance that I started with. Like I said, I didn't start with 0.02. This morning I closed out a trade, so I'm actually around 16% account growth right now on 1/3 of a BTC, and that's in the last 3 days. Now, I thought it was actually higher, and it should have been higher. But what I was doing was earning rewards for participating in trading competition, and rebates maybe don't count towards performance. That kind of, I don't know, it doesn't make a lot of sense. But my percentage was originally, I thought it should have been calculated at a bit higher, but 16%. And all I'm doing is really the same sort of stuff that I would be doing if I was trading my own personal account when it comes to the way I scalp. And for me, that's just a matter of hitting base hits. And I think that one of the more important things to touch on this with the concepts of base hits, and I'm always referencing baseball, but I was a wrestler, a lacrosse player, a football player. I played baseball as just part of being a kid growing up in New York. Your dad's your baseball coach at some point. But hitting singles, right? Hitting singles, not swinging for home runs, and not worrying about any particular one at bat, but looking at them as a total, right? So I don't really care about any single particular trade. I just care about my performance when it stacks up over the course of months and weeks. So you'll see that I hop in trades, and people who are members of BlockRoots stream or BlockRoots, they see that I hop in trade. I have dry eye again. They see that I hop in trades with very little hesitation. I see that 3 out of the 4 criteria that I normally look for are satisfied, and bang, I'm in. And if I get stopped out, we just move on to the next one. And a lot of the times, my entry might actually be poor. I might exit the trade, or maybe have a stop that's too tight. Trade comes back around, and I'm in it again, and it's like, whatever. It's like it never happened. Obviously, there are certain trade setups that you should really swing a little bit harder at, and it's just the same idea as if in poker, if you're confident maybe in certain situations. I'm not a poker player per se, but you're going to go in a little bit more, a little bit heavier. So and you could start to think of maybe how that makes sense if you consider how the Kelly criterion is factored, how the Kelly criterion works in terms of sizing. But either way, 16% account growth so far, really good. And just wanted to highlight because we are partners with Phemex, and they are a phenomenal exchange in terms of execution, and they are growing week by week. So looking good, but not even close to some of these top performers. So just want to highlight some of these guys. Yeah, I don't know how to pronounce that. But CTA Lunation, I can only imagine this person is a very short-term trend follower. So kudos to them for being able to grow that account like that, which I think is something to talk about right now before we get into maybe some of the deeper stuff. When you're trading with a smaller stack, you have less market impact. So as you scale up, as you grow your trading account, you're going to become more of the market. And I don't want to take this to the extreme and make it seem like, oh, you are, you got to worry about scalping because at some point you're going to become the market. No, it's obviously not like that. But if you are, trading on behalf of a fund, if you are, whether you're a fund or family office or a CTA, as just referencing a CTA before, or you're just a very big trader and you're in you're in an asset that is illiquid or it's something like an altcoin. I hate to call them shit coins. I'm trying to think of a better term, but it's the first thing that comes to mind. You're going to create market impact, right? So when traders are trading with smaller stacks, it's really easy to scale up in the beginning, which is sort of like the same way that Bitcoin grew. Your account value, your equity curve in the beginning, it's easy for that to sort of take on a logarithmic growth curve where you have what looks like tremendous growth in the beginning, and then as you scale up it begins to taper off. And if in the beginning, if you're looking at a portfolio value that is started fresh and you're starting with a small account value and let's say you're cycling through a few times before you finally hit it, well, there is something to be said for traders finding success or beginning to actually find their footing after they have a really good trade or a series of trades that takes them to that next level. So I think what I'm trying to say with that is there are definitely traders that did really well early on, and it was one or two trades that is really the responsible, not kindling, but maybe fuel for how their whole career progressed after that. Different traders have different track records and I'm sure different biographies as to how they got to where they are. Okay, so all that aside, there are a few things that I want to touch on. One of the things right now is last video you could tell I was pretty complacent with being uncertain. And I am right now because I have an adequate amount of spot positioning. I don't want to change it. I'm not going to mess with it right here. I know how continuation is not clean. Trends get very messy, especially Bitcoin. So I don't want to mess with anything. So I am really making sure that anything that is a low EV trade, and I want to call these trades that are just because my wife is not around. So trades that I'm sitting at the computer, I see a setup, and I just kind of want to get active, which is maybe not the best thing, but if you like to trade, you like to trade maybe for other reasons than just making money. You like to pit yourself against the market and see how well you play the game. If I have a trade that is a low expectancy trade, or maybe I think, because it's theoretical, right? You don't have an idea of exactly what your reward's going to be. If I have something that is not maybe the most attractive pitch, I'm making sure that I'm taking these trades that are more or less small scalps on a separate account. So during a time like this, I think it's really important that, and thankfully exchanges are really beginning to integrate these features. It's important that if you're trading, and especially for a lot of new people, because they're coming to me with questions and they're trading their stack, and I have a really high time frame, a strong high time frame and opinion around Bitcoin, where I don't want to mess with it, right? I don't want to miss the forest for the trees. I don't want to start meddling with something and do what happens for a lot of new people that come into the crypto market where they're trading too much of something that is a trade that's a macro trade, right? Something that they should hold on to and maybe consider building a smaller stack to trade around, which is what I'm doing right now. And the thing that I would say is that if you need to be active, if you're trying to learn how to trade right now, I hate to give advice, but I do think that we are going to see appreciation with Bitcoin in the long term. So make sure that you have that sort of, screw it amount aside. and you don't mess with that, because I know personally, even when it comes to altcoins, like I could sit here and totally crap on an altcoin, but some of them I just still keep a very small amount of dust in, that I won't remove because it's a negligible amount to me. And I don't want to be the person 20 years from now that looks at whatever form of media we're looking at and sees that they've developed some tremendous breakthrough where they have, I don't know, brought back the dinosaurs. Who knows? And I just think, you start doing that mental math of, shit, I used to own this much at this time. So I did this for Aave or Ave or however you pronounce it. It was Lend, right? It was Lend Aave. See, you could tell how out of it I am. That's not my area of competence whatsoever. But I was trading that in 2017, 2018, and I went back on my Binance account and I looked at my entry prices and I was like, damn, like I should just, if I knew about this thing went up, thousands of percent, and here I was trading it for 10% rotations. But you can't see that stuff down the line, and you have to really become, I guess, emotionally dispassionate about that moving forward, because you're going to have that constantly. You're just going to have to deal with the fact that things are going to occur that you're not going to be able to keep track of, and really prioritize on the things that you can. So those are VC investments, as I like to put. Another thing that I want to talk about is, we're seeing that there are these bigger players that are coming to this space. And with Bitcoin, since we've had this really long period of, bull market, bear market, sideways consolidation, move upward, move down, all these shakeout periods, I think that it's important to remind people that the players that are coming in right now, they're not cost sensitive. They are glad to get in around 10 and probably glad to get in around 13, because that to them is not a really noticeable difference for the size that they're dealing in. Of course it is. I don't want to, marginalize that difference in prices, because 10 to 13 is a considerable percent difference. And this goes back to when we had the trivia question about spreads, right? But they're not transaction cost sensitive necessarily in that regard, where their cost basis is going to really bother them. If they get in, I would assume even up to 15K, their idea is not going to be built around the next 6 months. It's probably built around the next 6 years, right? Or you got to figure at least 2, 3, 5 year time horizon. So coming from a traditional space, just from people who look at maybe higher time frame charts of equities, you'll see that they're like quarterly charts, they're monthly charts, weekly charts are like the lower end of the higher time frame chart that's more frequently used. So they don't necessarily care about Bitcoin moving up 10%. And you have to imagine that if they're getting involved here, and I do think that there is something to be said for big entities coming in, and there is something to be said for smart money. There's also something to be said for pundits not necessarily being worth listening to, but I think that there's a high probability that the people that came in right now, when you have Chamath, who's one of my, he is my, if I have a table of 10 people, he's one of them. I wish I could spend, a few hours with him. Intellectual elitist, self-proclaimed, but the guy is just brilliant. And I think that you could, I could see further when I stand on the shoulder of giants, sort of thing. So when you have people coming in like that, they're going to bring a lot of people with them, okay? Because they're sort of throwing their hat over the fence, going after it, taking that risk. And it's career risk. Maybe years ago it was career risk. But they're going after that, and there will be people that follow, and they're not looking for 10%. Okay, they have a higher time frame, long-term outlook. So that also more reason to, hey, if you have a stack right now, just be a legacy trend follower with that. Throw on a high time frame moving average. Do something that's basic CTA that hires PhDs to look jazzy on their pamphlet, but just follow moving averages kind of approach. And I think that's it. Let's go into the charts. Excuse me. One thing I want to talk about is more recent price action, which I wasn't necessarily all over. In my hours, sometimes you miss things. I got long after the fact, but I felt like there was still a little bit of juice to squeeze out of the structure. But looking down at this more recent structure, one of the things that I look for, and this is just, we're going to look over the anatomy of a squeeze. So what I look for is generally I have sort of an area that I'm focusing on. Concept of swing failure, concept of trap traders, it's all the same thing with different terms applied over it. But what happened down here is you have an area that the market is really focused on. You just lost a major point within structure. This was a rollover. This was not a squeeze. Sometimes, as I said, the market needs to sell off before it can move higher, especially when it's a market that's driven at times by derivative action. In commodities and futures, fear makes the market move up to the upside and to the downside, versus equities where there's downside risk primarily. Squeezes occur to the downside. If you're trading futures, there is someone who's taking the opposite side of your position, betting it's going to move in the opposite direction. So their fear is them closing out and price moving upward. So we have price that has made a swing to the downside. You get a lot of people that are just first order thinkers at this point, and they think, oh my God, this is it. This is the level. It didn't even do anything blow off top-ish. And it was just a loss of momentum in this unwind in delta. So you get a very top-heavy portion of structure, kind of just rolls over under itself. And the first bounce is sort of the threshold that everyone's paying attention to. So the market will come into that full steam. What you'll see is you get a ton of aggressiveness down here. Now you could do the price action thing and pay attention to just the low. What I pay attention to is CVD, because you didn't really get the break of this low. You got the aggressive move into it, but all the while down. Okay, so I'm not going to open up Sierra because that'll probably use more CPO than I want to use, and I don't want to crash the stream because I've never rolled with all these features. So we'll go to Trading Light, and we're looking at BitMEX because BitMEX is still very actionable. And over the course of this structure, all right, you have open interest moving up, and you have CVD that's not doing necessarily the same exact thing that price action is doing. It's making the same lows as price action is making higher lows. Open interest is increasing. It's just an indication that there's still aggressive selling, and it's premature at this point, right? It's the idea of, oh, I'm getting the first really easy backside retest, continuation to the downside. And, the next move down to the low makes this really obvious, because what you have is CVD that's broken all these lows with an oomph, and you have, over this course of this price action, you have open interest that's gone up. So what do you have, right? You have new business. You have aggressiveness into the low. It is new business, so it's not old business closing out. So you have an open interest increasing. And then one of the things that I just look for is a trigger, right? Where did all this where did all of this delta come into? Well, it came into surrounding this structure. Okay, right around that structure, what we have is daily VWAP. It's not on this chart right now. It's on my Sierra chart, but it's actually right around here. So that is where the market put on risk. If you're just considering, one for one, if buyers and sellers put on the most risk together there, well, who's in a better position if we're sitting above it, right? Buyers are in a better position. So we made an aggressive move to the downside. We're trading back above that. We're trading back above the structure that all of that delta came in under. And it's that simple. I'm going to take the swing. And if I'm wrong, I'm wrong. But, I know that 80% of the time that I'm right with that. And especially when we're in this sort of larger context where the prevailing trend is up. And that's that. It's a simple trade. I closed it out. Just to be honest, I closed this trade out prematurely. So as you can see on the trading account right now, I'm looking for a wick to the upside, and I'll explain that in a second. I'm stepping in front of it. on the trading competition account. I'm not doing it on my personal account. But on the order history, I closed out that last trade at, where did we close at? That long out at, let's move this up. Closed out that long at, come on. Order history, it's further down. Market, I don't know where I closed it out. Well, okay. Okay, there we go. So opened it at 13,449. I left orders below. They didn't get filled. That's why they had those green lines on Twitter below it. And I closed out at 13,571. Saw that we were approaching a level that I think was a level that maybe a lot of people were paying attention to. Figured I would front run it, right, just in case we had some move up to it. And I was exiting during a period of slippage rather than exiting sort of whenever we had the book pressure still below us, right? Because I'm dumping a lot of this stuff with market orders for the competition, because they are small account positions. They're 25,000 contracts. I'm trading with anywhere from 25,000 contracts to 50,000 contracts, whereas in my personal account, normally I'm trading at least 4 times that. So we got the move up to this previous area that was brief support. I'd say that it's really negligible, not even worth paying attention to too much. But I am looking for the high to be taken, because a lot of the times, all right, when you move vertically into a level, and gone over this many times, is a phenomenal trader that goes over this too. I am willing to step in front of something that moves vertical versus something that sort of grinds its way up. So my idea right now could very well change in the near future. But if we're just about to spike straight up to this level, I'm willing to step in front of this, at least for that quick snapback. I think that we would have initially a quick snapback and end up coming down here and moseying along even further versus having this squeezing much further up. I don't think that necessarily we're in a position to do that right now. Open interest is still kind of low. Conditions aren't very ripe for a squeeze. You do have it still increasing towards this high, but I don't necessarily think that we're in a position right now to have this just continue to squeeze upward. I could be wrong, and we could see that I'll lose another 2% off of that trading balance on the competition account. But generally speaking, after a big sell-off like this, and if I'm just saying what I personally think is going to happen, I think that we're honestly going to end up creating a higher time frame range. And I think that there's a really strong possibility that the first people get punished, always. So the first people that get punished, assuming much further downside correction, okay, they're punished, price comes up, takes this level, and then we end up doing something that, not even going to draw something that's meant to be taken seriously, but we move in a higher time frame range. If we look back at previous structures, you see a lot of similarity between this structure and those ideally below where we currently are. I would want to see this act as support. I'd be willing to get long for some type of bounce off of that and step in front of that. And if you go back to April, there's a lot of similarity between the structure that we have right now and a period back in the middle of April where it wasn't necessarily that clean. It was kind of loose. All right, where are we? Where's April? June? All right, it's going to take a little bit long. I see I'm not the best at trading view. Where we have this move down. Okay, this is an example right here, but this is a little bit different. It's not as, this is a straight extension into resistance. We don't even have any kind of base built up above the level. Ends up dumping through the level. I don't think that that's necessarily the case, what we're going to see right now, because remember, what is one of the more important things to focus on? All of this that we're looking at, context was way different. This is coming off of that March low. This is still below major levels. Market confidence is really not there. But again, you could also see if we go back to something like this period, this is a really good squeeze. Low, low, aggressiveness into low, price trades higher. And you got to be willing to buy these moves when they're trading higher, and you do see two out of the three of those pieces of evidence. Because then you're just going to be, ending up thinking about it up here, and you're more likely to get chopped up the further up you go. The risk reward at that point theoretically is greater down at this low, right, where you could more contextually define a position to exit. But you see, we came back above this level. Okay, you should treat this as support, right? Ideally, we would treat this as support. Everything I'm going to be doing right now is going to be really low time frame orientation. If if I'm scalping the low time frames, and I could look at something like the daily range. And I'll look at, today's daily range, and let's say today's daily range is, or you could look at ATR. If today's daily range, for example, is, 4%, if I capture half of that value scalping, I'm happy. If a day's ATR is $400, $500, if I capture a $150 rotation, if I capture half of that day's ATR in a rotation, in, multiple rotations, I'm more than happy, right? And this is because I'm positioned with spot, and I'm more than content with that as well. Ideally, though, you would want to see that in a consolidation like this, if the structure is that this consolidation is a failed breakdown, right, and we rip back up to the upside, you have to imagine a good amount of this is a squeeze. But if this is going to be organic and maintain strength to the upside, you would want to see that this area holds. I ended up needing to chase this. In bullish situations, you get the more shallow pullback. So what I would say is a lot of the time, and this is something, I made a mistake. I was looking at this level right here. I have my bids right there. And arguably I should have been looking at this line that I already had on the chart, right? This focus point right here, because the market had moved up there and it chose the first place, right? It's not that it chose, but buyers that were maybe more privy to this or more, they were a little bit more aware of this, they front ran that area. And I don't want to get overly focused on, and I'm going to go to some of the comments in a second, not to get overly focused on that particular point, but the idea that in a bull market, just, I don't know, I don't even make, there's no science to it for me. I honestly, just keeping things real, I just front run the area a little bit. I front run it by something like a half-hour ATR. So if I have, if I think that this 10,000 support is good to buy, and that's a pretty large integer at that point. It's a big obvious number. I'd probably front run it even more. But if there's an area of support and we're in a bull market, I'll front run it. I'll front run it and I'll take the little bit of pain. Sometimes you have to bear, but sometimes you don't get filled if you're going for that level. If the level is really obvious and you're in a bull market, this is not it's an easier poker table to play out, but it's not exactly that, hey, if I just know where the major levels are, I'm guaranteed to win, right? No, you might be guaranteed to chase because you're just focusing on those levels and you're not maybe thinking with any kind of second order approach. Not even to say that that's second order thinking, but not even, I hate to call it game theory either because that's sort of a phrase that's overly thrown around. We'll just call it decisions, making smart decisions in these conditions. So if we get this retest, I'll look for some activity right there, thinking that this should hold. And remember, we went over these sort of ranges and why this occurs to begin with. When you have those OCO orders, when you have those breakout sellers, for example, okay, I think it's important to go over mechanics sometimes. You have this point that everyone's focusing on. You get the market sells through the level. OCO orders that place stops within this level, above this level. So any type of reacceptance into the level, it's just kind of like it's ripe with all of this we'll call it, I was going to call it landmines, but we'll call it just this involuntary buying pressure, right? It's built into the structure at this point through those OCO orders, right? Because a lot of times, if you're thinking beforehand, you're going to have all this stuff placed and you're going to have all that stuff figured out before you actually place a trade. So yeah, let me see if there's any. So this is the next area I'm focused on, right? So this next area, and I'm looking to get some type of peel up here. But if we do something like this, if we start building a base around this location, don't take these drawings seriously. I'm just trying to convey the idea of moving sideways, establishing a base. Let's say that we see something like this, right? Price is respecting this area. We see something like that. And then we see something like this. Okay, price is moving along, retesting this level. All right, we see something like this. CVD making lows, open interest, moving sideways or moving higher. At that point, I don't want to try to fade the next area blindly. I don't want to try to step in front of it, right? Like the 300 Spartans at that point. I don't want to do that. I'll just remove the trade. I'll remove the trade and I'll just wait for a different trade because that's all, that doesn't matter. Yeah, I would ultimately, I would look for this area. I don't know if I'm going to step in front of it right now by putting limit orders right there. I just want to see how this transpires first. If we start moving down, then I could just change that immediately. And to be honest, with the trading account on the competition, I am using a lot of market execution. One of the benefits of being a little bit smaller in that regard, even though it's larger compared to a lot of the other accounts, is you're able to chase momentum without getting hurt that much. It's costing me about 12 to 17 bucks a trade. Okay, so let's see if there's any chat stuff. All right. See, I'm trying to make this as seamless as possible. And then we'll take questions. And where's my mouse? Why is it? My mouse has disappeared. Oh no. Why would it do that? Hold on one second. It's not that it's the cursor has disappeared. Oh, where's the cursor? Why would you do that, cursor? That's frustrating. Well, we'll have to really wing this and just go by feel. That is very odd. Let me see if I can figure out why. So let's Control-Alt-Delete this bitch. All right, there we go. Okay. Alrighty, so go through some of these. Are you guys hearing an echo? All right. Wow, there's a lot of comments. Shit. Bear mug is a bad omen. No, it's not. So I got to be honest. I actually love bears. I love animals. I have such a soft spot for animals. I honestly have a soft spot for all creatures. Just a little insight to me. I don't kill bugs. I don't kill bugs. I don't kill spiders. I if I could, I'd have every kind of animal in the world. And the concept for me of not killing bugs, and I don't know how we got from bears to bug. I just love animals, right? I love bears though, but don't kill bugs because I think that you should be kind to all forms of life, hoping that life is kind to you, which gets to the quote, don't expect because you don't eat beef that the bull won't give you the horns. But I think there is something to be said for respecting all things in life. And the bear comes from, don't sell the bear skin before you bag the bear. But I have a lot of bear mugs, honestly. An odd obsession with bears, which goes back to my hiking days, though. I spent a good amount of time in the mountains. Black background, thank you. Okay. So I'm not worried about the CME gap. It was a breakaway gap either way. And I'm not necessarily worried about it unless we're close to them. And I think I've gone over why it's a self-fulfilling sort of process if we're close to them. You just have less incentive for people to step in the way until something like that's filled. Although, there is something to be said for this market right now being less retail driven and therefore those technical factors not being as important. Too perfect. What's up, my dude? I hope there's no echo, guys. So just keep me updated. I'm just going through these. No, I don't play any computer games. No Fortnite, nothing like that. Oh, you fixed your speakers. Okay, good. Okay, trading story would be interesting. Gotcha, cool. I've gone over that in podcasts before. All right, we'll go over that. Predicted XMR. Okay, so really quick, my trading story. I went to school originally for finance and econ. Got to look in the camera. I went to school for finance and econ. Had a change of heart during Hurricane Katrina. That was when I think it was Dr. Sanjay Gupta, who's on the TV all the time now. It might have been him. Was all over the TV, and I just saw the amount of the tragedy that was occurring, and I wanted to be a doctor all of a sudden. So I changed my major to biochem and biochem. At that point, it was just biochem. Excuse me. And then I didn't like lab. I actually love science. I'm a science nerd, but I didn't love lab, and I just made a really stupid decision, overnight, and realized it wasn't for me. So I changed back to finance and economics. During my freshman year, I was one of the only people to bag an internship for at the time, which was at the time Smith Barney. So if you've heard of Solomon Smith Barney, you go back to the old days, straight out of the book Liar's Poker. Got that internship, did a stint there, was really fascinated with the entire financial universe. At the time, I actually honestly wanted to go into investment banking. Had a change of heart, has always been trading since I was a kid, not successfully. So for those traders that say they've been starting since they were kids and they were phenomenal, I didn't do anything that was successful whatsoever in the market until I got into my mid-20s, right? But out of college, I was hoping to get a job that would have been a dream job. And my grandfather is a pretty big guy in the commodity space. He sits on a few college boards. Not going to go into what his name is. You would never guess it either way. His last name it's a very Greek name, put it that way. But he was a really close buddy with the head of Lehman Brothers at the time, which was Joe Gregory. I should have had a job set up with them. At the time, I was working at a family office, hoping to sort of pass the time, learn as much as possible, get the job, which ultimately came to a really shitty point at the end of 2018 during the financial crisis. So as you can imagine, if you know anything about Lehman Brothers, that didn't work out. Ended up working for the family office for the next 2.5, 3 years. Did a few things with family outside of that. I helped my sister start a company. I've always had a feeling that I was going to try to go off on my own. Okay, so I started Kenner & Clark Partners, was a very small player trying to take on, I wouldn't even say take on, that's a really pathetic way to put it. Trying to establish sort of my own position as a smaller fund. I'd say I had more CTA-like approach, more time series momentum, more of a short-term volatility play on traditional markets, primarily in equities, long short. And then in the last 2 years, did a full pivot, and I am full-time crypto. So I have pretty extensive background in traditional markets. I don't actively trade traditional markets anymore. I have a really passive approach to traditional markets. But I didn't overnight just join the crypto market and become a great crypto trader. I came into it like I was going to. I performed exceptionally well when I first arrived to the market, but there's there's so much nuance from market to market, and I think that that's really important to understand. It's like I've said it before, it's like a dance partner. So it took me, and I'd say I'm still at this point becoming I'm still improving as a trader, because crypto is, it's still so nascent, but because it is still so nascent, it's evolving, I think, a lot faster than traditional markets. Or, in my experience, it's not like I came to traditional markets in a period where traditional markets were really evolving much, right? They had been around for a substantial amount of time. So I really got into trading. I went from trading more from a trend following approach when I came to crypto, because crypto was more or less my side, the side trading I was doing outside of traditional markets after trading equity derivatives and then trading crude oil. So I was kind of like passively allocating to crypto. It's a very easy trend following market to get into. Now I've taken a more higher frequency approach to the market, and I don't mean high frequency like a high frequency trader. I just mean shorter time horizons, really no overnight positions. At this stage in my life, I don't want to have overnight positions in this market, other than spot allocation, which comes with a completely different expectation, right, in terms of what I am looking for. But I really got into lower time frame trading in the last year, and I'd say that in crypto, it has not been, there have been these tools that, for example, when I was trading something like crude oil, the most popular thing to use had been available for years, and it was trading technologies. When I came into crypto, all of these order flow tools, all of these tools that I think cater to shorter time frame traders now, you have tools for everybody. They weren't there, right? The application wasn't there. The connection to the exchange wasn't there. Sierra still only has integration with, I think, Bitstamp, and I don't even know if it has BitMEX anymore. But all of these tools that you're seeing me use now, they weren't there, right? So I think that it was a matter of time until they came, because the market would mature and sort of move in that direction. I don't think that you want to be necessarily trading Bitcoin with a ladder, the way you might trade crude oil if you work at a prop shop. But yeah, I've taken a more high frequency approach. I am full-time crypto now. Obviously, we have BlockRoots, and I think that if you can diversify your income streams, by any means you should, even though that's not necessarily diverse, because I'm trading crypto and that income stream is from crypto, right? So it's not necessarily diverse. They're still exposed to the same systematic risk. But yeah, so that's all I'm doing now. Trading full-time, doing this, and managing BlockRoots, and now doing these live streams more frequently. And I have no intention of not doing. It's not like I am this diehard trader anymore. I'm 35 years old. Honestly, this is a phenomenal tool. That's what it is. It's a tool, and I think that I would love to open up a restaurant one day, right? When I was a young kid, I bartended. When I was in college, I bartended. And I would love to open up a restaurant, even though it's the shittiest business to get into. But at that point, opening up the restaurant, I don't think I really care about the money. I always wanted to get specific. I always wanted like a jazz spot with artwork on the walls. I used to go to this restaurant in New York where they would change the artwork every single week, and it would be a local artist, and they would get to have all of their artwork displayed and use the restaurant as their as their gallery. So I thought that was awesome, and have a little live music, have the right ambiance, and retire that way. But always willing to do anything, to try anything, and to really grow my human capital, right? So more questions. Okay. How can I learn from BlockRoots? All right, we'll go back to some of your questions about the assets we'll go over. And I think that's cool. Phemex. Okay. That was Trading Light. All right. Echo. No. Yes, Echo? Dang. What about Echo if we do... Let me turn off this. Is there still an Echo? No. Wait. Not work unless I have it on. All right, I don't know why there's an echo, guys, but we'll have to figure that out for the next stream. Maybe I got a little too fancy. Okay. Cool. Yeah, so biochem was something that I thought I would be interested in, but I still have a very strong interest in biology. And I think that, anything in life, and this goes to the concept of hormesis, you should try difficult things in life. You should try things like trading, even though a lot of people try it to the point where they're banging their head against the wall, not really applying any kind of process. Because I think you grow as a person with all the things that you pursue, right? It's a concept of hormesis, which is applying small amounts of stress to a biological system, and it creates this sort of anti-fragile or positive response from these small stressors. Sort of like the concept of working out, but for your brain. Okay. I think those are all of the most of the no echo. Okay, so no echo. All right. Okay, so I want to go over some pairs. If you guys want to share any pairs that you would be interested in going over. One of the things I thought was interesting to touch on recently was Chamath talking about, so he was talking about how crypto, and you could see that in the last 24 hours, it's really been these wonky correlations. It's sort of everything's been positively correlated. But again, very short term. So SPX moving up, ES moving up, the dollar moving up, Bitcoin moving up. And one thing that he said was the short-term correlations that everyone's paying attention to, they're as useless as everyone paying attention to the short-term price action. And that the higher time frame argument for the lack of correlation to traditional markets is because the crypto market or Bitcoin, the user base and the believers, all right, the people that are in this market, all of their beliefs are sort of orthogonal to traditional market participants, to legacy incumbents, right? Because it is a completely new way of going about, one, how assets are stored, being able to have self-sovereignty, how, for example, things operate on the blockchain, everything that benefits from, or rather everything that we take advantage of by being holders of BTC, something like the Nakamoto consensus mechanism. All of these things are orthogonal to the way that traditional markets work. And orthogonal just means that, it's a right angle. It doesn't work. It doesn't run parallel to how traditional markets operate. The idea of, banking the unbanked, I don't want to get too far into that narrative, but being able to be your own personal bank, being able to be your own Swiss bank, which is something that's sort of coming under scrutiny lately. But that this is something that is taking a longer time for market participants to sort of get on board with, but that they are now, and that, regardless of these short-term correlations that we're seeing price action between something like the ES as a risk asset or gold as a haven, that the longer-term picture, it is leading towards a more uncorrelated, I don't even know if I want to say a situation where Bitcoin is completely uncorrelated from traditional markets for a long time. It might just be it is right now. As I'm saying that, I'm having kind of a conflict with it, because as markets become more mature, macro correlations become stronger. But either way, he was saying that it's orthogonal to the way that things are right now in the legacy market system, which does make sense, right? You could understand that alone. But that the short-term correlations that we're seeing are not necessarily worth paying attention to if you're a longer-term participant. So for those of you that get shaken out, I guess that would be a message to you. And then, so do we have any comments, any assets you guys want to chart? Okay, Link. So what you're seeing right now, and you're seeing this with Link, you're seeing this with DOT, you're seeing this with ETH, is there is this relative weakness compared to BTC. With a lot of alts, okay, just to describe, the concept of a blow off top or alt season, well into this whole hype cycle. So for a lot of the DeFi pairs, for something like Link even, which is why I'm sort of hesitant about Link beyond this 15 level. Well into the period of upward price action, there were people still saying, I wonder when we're going to get alt season. So as that was occurring during periods like this, as we're still moving up, you have to imagine that as price continued to move up, we pulled a lot of people into the market that felt forced in. So they were chasing momentum. So after you have a blow off top in an asset, after you have any kind of parabolic run up, there is a lot of supply that's going to be left over. Now you have a lot of bag holders from really high up. And if they're still holding up here, you could bet that although they might be really positive about price moving back up to their level, that they're probably going to reevaluate and maybe consider getting flat until things look better again. And what that ends up creating are these patterns where price will look like it's making a break towards the high again. We already had a parabolic move, and the next thing you know, it's dying before the high. And then you get the same thing on the way down. Price looks like, oh, this is the one, and next thing you know, it's dying again. Because with each one of these moves down, you're getting more and more bag holders that are being added to this equation, and it takes a really long time for this stuff to shake out. So with alts, I don't think that, considering alts are looking like this right now, I don't think that they're in a position, and it's just this perfect storm with where Bitcoin is, to do well in the near future. To do well in the near future, Bitcoin has to, I think it has to put everyone in a period, it has to put everyone in a position of being really certain about what its direction is. And hey, it's going to range for a long period of time. Now, how do you determine that though, right? That's an odd thing to say. Bitcoin dominance, for example, you wouldn't want to see it continue to go up. ETH, for example, you wouldn't want to see ETH continuing to underperform. This is sort of like the, you call maybe ETH the DAC, compared to the rest of the crypto market. Some people call this the S&P. Maybe you could call it the S&P if it helps you understand that ETH is sort of the leader in terms of the higher beta pairs. But ETH is underperforming. Bitcoin is in a position where, when I say uncertainty, I think that Bitcoin, if I woke up tomorrow and Bitcoin was at 1600, I'd be like, yeah, it's at 1600. Like, obviously it's going to go up there. On the same token, if I saw a few hours from now Bitcoin was down at 11.5, I would say, yeah, shit, what were we thinking? This is Bitcoin. So it's not that you should understand maybe directional plays as much before you understand the level of volatility in the asset you're trading. So the fact that, that you understand that and you're complacent with it, that's a good thing. So get to that point, because that's something you should become familiar with. Bitcoin does either one of those situations, moves to the upside, moves to the downside. Nothing is going to move. I don't think anything is going to outperform it. If something outperforms Bitcoin and you see XYZ alt is up against Bitcoin, go look at the volume. There's probably nobody to sell, right? There's probably no one even trading it. It's been such a, let's just say a neglected pair that it's not moving at all, because there's people not even at the computer selling it. It's kind of just forgotten at this point. You're going to see that I think that if Bitcoin moves up or if Bitcoin moves down, that alts will have an inverse correlation, right? That alts will still capture more downside. So alts, if Bitcoin moves up, will have a negative correlation. Alts, if Bitcoin, move down, if Bitcoin moves down, alts will have a positive correlation to BTC. I don't think you're in a position right now to see, I think the best, this guy he's just brilliant. And, for anyone who's watching this and is sort of at a, they're not really sure with what they want to do with their life, or, where they are in their career, take notes from people who have done things very successfully. There is a degree of survivorship, but pay attention to really smart people. And Su Zhu is someone who's just absolutely a Laputan in terms of brain power. And if you don't know what a Laputan is, or the island of Laputa, you have to read Gulliver's Travels. But just absolutely brilliant. Not to say that he doesn't have self-awareness like maybe some of them do, but absolutely brilliant guy. And what he talks about is that, in this position, all right, so let's get to let's see if I could pull up a chart. I'm thinking what particular asset. All right, so ETH. One, we have a lot of people that are not as exposed to BTC yet. They're kind of sitting on the sidelines, right? I'm trying to literally think of the thought that I anticipated finishing my sentence with, guys, and I literally just fucking lost it. And I tried to, beat around it. Oh, let's figure out let's pull up a chart to pull the example up. Holy shit, I just lost my train of thought. Wow. Okay, guys. So, Su Zhu, what did he talk about? He said something that was brilliant. You don't see a chart? I know, you're looking. Oh, wait, because that's right, because I'm back on this. I'm still looking at the comments. Okay, so I'm talking about, I was talking about Link and how it had a blow off top, and on the way back up, it has I just completely lost my train of thought, guys. I was looking at the chart and looking at the live stream, the chat box, and talking about what Su Zhu said, and I completely just dropped the ball on what I was supposed to say. Oh, I was saying something about following really smart people. But but I can't remember exactly where that was supposed to take off to. Shit. All right, we'll have to change the subject and segue back to that. Any comments on charts? Okay. Yeah. Okay, you don't see the chart. I'm going to try to remember that. 1 second. No one predicted this mini alt bull run either. No. No. What is the thought that I was trying to think of? Shit. I'm completely... It sucks. I had a good point, and I was like, you know in your head when you have a good point, and you're like, I'm going to get to this good point. And then you fucking completely forget it because you dedicate all the brain power to thinking how you're going to say your good point. It's okay. You don't need to see the comments. It's completely fine. The comments are right here. But so give me some alts to chart, and we'll get back to that maybe, hopefully. So anyway, I gave the Bitcoin levels. DOT looking like shit. I don't think that anything is really set to perform well. I don't think, because if Bitcoin moves up or if Bitcoin moves down, I think that everything gets penalized. But I had a freaking point. No, Suzu. I'll share the link on. Yeah, there you go. Oh, shit. What was that point that I wanted to make? That sucks. That absolutely sucks. Selling pressure right now. So let's look at. So we're at 579 still. Go back to the BTC chart. I'll remember this and I'll end up making a video about it again in tomorrow's stream. I had a good point though. I had a good point. Link. No, it was something else. I know I was looking at Link. What it was saying was after these parabolic runs, you have people that are, you get a lot, you pulled a lot of people into the market over here. And as price approaches that level, they are going to say, oh, I'm really happy it's approaching this level, but I'm going to split and reevaluate. And if it does this, X, Y, Z, then I'll get back in. A lot of the same people thinking in the same way create that lower high, right? And then it just moves further down and we see this sort of pattern progress. But I had another point that I wanted to tie on to that, and it's just I'm bereft of words right now. But everything right now is struggling against Bitcoin, right? So everything currently is struggling against Bitcoin. And I think that until we see that Bitcoin dominance is beginning to decline and maybe ETH is beginning to put in some positive price action against Bitcoin, that it's not maybe the best place to be to try to be buying what you think of the bottom for alts. For example, I think the Wi-Fi is going to come down to single digits. And I've said this previously, if we lost this level and then didn't reclaim this blue box area, that we were coming down to single digits. It's just the market with alts looks at alts in a very technical fashion. And if you're in dead space, like if we gain acceptance into this area, with 90% of the people that are trading this, they're looking to step out of the way until the next major area, right? Where they can agree that it's a good area to buy. And a lot of these higher time frame levels just serve, just as that, where what's the incentive to step in that area? You can't really define your risk in a clean fashion. Okay. VIX has dropped, but yeah, the VIX is something that Bitcoin is inversely correlated to. When VIX moves up, I know I was saying pay attention to Suzu, but it was a really good example that he mentioned, a really good point that he made. And I just can't remember which one it is. It was on the Uncommon Core podcast. It's really going to beat me up that I can't remember it because it was actually a really good point. And instead of me getting right to the point, I, like myself, spoke in an ellipse and talked about Gulliver's Travels. Yeah, but it was a good point. I promise it was good. So if you could take anything from me just saying that. ETH BTC. Yeah, I don't think ETH BTC. So let's go to the ETH BTC chart. Why does it keep disappearing? It's like I guess I'm not saving my chart settings. So if I'm looking at this just from a technical standpoint, I don't really have an incentive to step in ETH BTC right where it sits, right? This is in dead space. So if I'm looking at where are the areas that aren't dead space, well, I'm looking at maybe once this wick begins, the low of this, because that is a gap right there. It's like the only gap that you have, and this is weekly time frame, so there's obviously been a ton of activity that's occurred. So the only area I'd be willing to step in is probably down at this level. So I wouldn't be willing to step in front of ETH BTC. You would need to, for me to step in front of ETH BTC, to give you an idea of, try to convey what that would look like, it would need to look something like, let's say we did something like this, took out this low, spike that, and now we're trading with something more along the lines of this. We're retaking previous levels, And then at that point, I'm probably looking at just this low, keeping in mind that low right there. It doesn't leave me with a lot of higher time frame trades, because one of the things also to keep in mind is things are the way. I don't know if you guys can see. I have my little when things are good in the market, I have the weak one. When things are shitty, I have the tough one. So if you see me playing with this, I'm always playing with this on my desk. One of the things with ETH is that it's not a guarantee that it continues to just outperform with Bitcoin, right? As the market matures more, as people come in with a more fundamental approach, smart money might have a different opinion on something that is not necessarily as scalable as ETH in its current form. And obviously, ETH 2.0 might change that narrative, but how do we know that a lot of this rally wasn't built in around that narrative being baked in already? So, or that the narrative is baked in and it's priced in. So, you know, it's not a given, and I'm very iffy about my ETH spot allocation again. So with BTC right here, so let's just look at potential scenarios. If this is going to turn into another higher time frame range, I'll look for the same behavior as the last, right? You have this higher time frame structure that builds, okay, and maybe price spends some time down here again, makes an attempt at the high. Either way, I don't care how you draw this. What I'm looking for is the same sustained selling pressure. Again, on the derivatives market, the signs and basis that traders are betting against this being a reversal. No blow off top yet, and I don't think that this stops without a blow off top. You have a macro growth driver right now. If you have this sort of structure right here, let's say that this turns into this and breaks above this level. I don't think, and let's say you don't see that immediate rejection above here, I think it's a buy, honestly. I think that if price moves like this, breaks above and through this level, I think it's a buy. I don't know if there are levels above us that are psychological levels, but there's really no supply, you know, that if we're going by previous activity. If we just break above this level, we get an expansion out of this with a high time frame candle, and we don't immediately reject, I'll look for this pattern that we form here, anticipating that low time frame pattern will lead to continuation. What I would rather see is a base be built. So I'd rather see something along the lines of some type of pullback to this level, build a base, and then I think that I'll just trade this back to these levels. But argue, you know, what would I think be the most attractive structure? I think it would be more time sideways. I don't want to see things look slippery to the upside. I don't want to see this thing continue to just go straight up, because then I'll be less confident, because at that point you're going to hurt a lot of people by moving straight up and then having that $1,500 candle move straight down and then be in a really long period of sideways price action. I think that ultimately you make the market more confident the more that you build these little bases and expand, and then continue to build these little bases, expand. And for me, again, as long as we're holding the last area loosely, I'm fine. You know, I had bids down here, I removed them because I'll reevaluate that idea, the idea of a flush and then a reclaim. But I think that the best case would be to continue to move sideways. Could this continue to expand upward? Yeah, but it's not the case that many times you've had a big rejection and then a V-shaped reversal in the same 48 hours that continue to go on much further without having a big correction after. If we just look at previous times where we had this doubling back, the last one that looks really like that are these periods right here, where you have a double back and then you have more correction either way. So after a big kickback, you're going to get an immediate buying response that's going to follow up. So it's almost like after we based out, it was written or built in already that we're probably going to retest this close, right? So this daily level. So that daily level it's 36, right around 36, which is why I was taking profit right around there, and it's right around the underside of the structure, underside of this micro consolidation. But on the high time frame, if you see structures that have hide and then doubled back right away, they haven't exactly gone on to do a lot of the times more than that, where they come back and they form another longer, higher time frame range, or at least you get a check back down to this low. So yeah, I'm not overthinking this, and I'm not getting too gung-ho, but if we do flag above this level, and that situation I was just spelling out, that's if we break above this level and you see a very quick rejection. Then I'll look back down at the low. If we start flagging extended above 14, and you don't get any kind of pullback besides this lower time frame flag, then I'll just buy this with a trailing stop. And I'm really, I guess I just lost that point because it's not coming back to memory. All of these, though, suffering. And I think more blood is to come. Any other questions, guys? Let's see the questions again. Okay. Ooh, moving my head. All right, where's the questions? Okay, make sure we're scrolled all the way down. Okay, COC 125. COC 125. I think that gold is going to continue to go up over the next few years. I think that gold is going to continue to go up over the next few years. Gold just takes it takes a much longer time to play out. You know, if you look at gold, it's much slower moving than, it's a legacy asset. It moves much slower. The consolidation is going to be much longer. After we broke the last all-time high in gold, it took like over a year before we continue to move back up. So if we look back at just that period to reference that, that's actually back here. So after we broke it, you know, 2006, no, 2008, 2009, 2010, before we had that peak to draw down back up to the high. So it took a really long time. I don't think gold's going to become reflexive like Bitcoin yet. I think that you have to keep in mind what direction gold has chosen. And clearly the trend up, and this being a macro all-time high break. Very significant. That could mean gold does something like this, right, over the next 2 years. But I don't think that it's, I think we're going towards a world where gold goes up in value. Okay, how advanced is the order flow course you have on BlockRoots? I'd say it's as advanced as you can get. What we have are 42 videos specifically on order flow and market profile. They talk about all the things that you need to do before you need to put in the most important thing, which is observation. Purpose-driven observation. So having all those things in your tool set is nothing if you don't look at the chart and look for those occurrences, or those how buyers and sellers interact based on what you've learned within that roadmap, or within those roadmaps. You know, trading is, there's so many trading videos on setups and, you know, approaches, and it's so important that after you've learned anything, whether it's freaking Elliott Wave or moving averages or RSI or whatever tool it is, that you just consistently observe it and try to apply it for a long period of time and see how it stacks up. So what we do is teach you how we trade discretionarily, right? And there's always going to be a place for that. There's a lot of quant guys that I've heard from recently and talked to from legacy markets that talk about how there's going to come a point where there's diminishing marginal returns for these quant algorithmic high frequency strategies, because they're running into trouble with things like machine learning and their ability to sort of create these adaptive strategies that continue to produce yield. So there will always be a place for the manual trader and the discretionary trader, because it is the people that are going to be creating these systems that do operate based on certain amount of inputs, right? That are most of the time pattern driven. And I'm not just talking about patterns in price action or structure. When you don't know, the point I think was about when you don't know what you want to do with your life. Yeah, maybe was that? I'm not sure. I don't think that you ever arrive somewhere. You don't arrive. It's constantly just a long path, and hopefully you get really good at trading so you could use it as a tool. Or you like the game, right? I love the game. I love the game. It's a great tool also, though, obviously, but I love the game. When I got, obviously when I was a freshman in college, and when I was trading, when I opened up my first TD account, or at the time when I opened up, I'm trying to think of what was the first brokerage account I used. It might have been TD. I can't remember if I was using Thinkorswim. I don't remember if it was around then. It probably was just a web-based client now that I think of it. But at the time, I wasn't thinking I loved the game because I wasn't playing the game well at all. Okay. Looking into the future and the centralized digitalized world, only problem with gold is you can't move it. Right, so, Bitcoin has more utility in that sense. Bitcoin has more utility than gold. You could move Bitcoin around a lot easier. Any other pairs you guys want to go over? Any other pairs? Got a good amount of people watching. Just something to keep in mind right now. All right. One of the things to pay attention to. I think funding rates have always been a phenomenal indicator. I don't really necessarily care about the funding per se as much as I care about the thing that leads to the negative funding, which is basis. So right now you have Binance, you have FTX, you have BitMEX, you have one coin margin perpetual, which is going to be more liquid than the USDT margin perpetuals. You have one of those and two USD or USDT margin perpetuals that is negative funding. And I think that that's a good sign, right? You're going to see that a lot of the times if price is just ranging and you continue to have this negative funding, it's people getting in position early and the market's not doing anything, right? They're putting in work, they're putting in an effort, and the market is not responding. LTC. Let's look at LTC. So LTC used to be my favorite because it was what I got around from exchange to exchange with. And LTC, you know, I know it popped the other day, but it's just I think it's back to underperforming, right? Yeah, that's a downward spiral right there. I really want to remember what I had to say because it was actually a credit to Suzu. It was a great point. And I was just going to paraphrase it. But hey, that's good, right? If you curate information well, then you're doing something. Don't worry about that drawing. But this is just, it's not looking good at all. That's the high time frame chart. Right now, I think that there are people that are still looking to get in alts. And I don't think alts are where you want to be in the near future. XDZ got smashed. So I've been talking a lot of shit about Centivate lately. I think it's for good reason. And I think that you have to think with some sort of second order, and I won't even entertain it like it's that hard of second order thinking, but with, yeah, this is ugly, man. Ugh. So this is just in a level where I wouldn't want to be a buyer until down here, or until at least we reclaim this weekly level. Don't even have an interest in it. At this point, if we reclaim this weekly level right around 16, I would look at, you know, the underside of that structure, but not interesting whatsoever. Right now, when I say that alts are shitty right now, trust me. When it comes to something like this, Centivate, okay? Now, I said the next time I tweet would be when this thing retraces completely. So this is when I tweeted, okay? This is where we are right now. In an asset, okay, where there's a lot of things that have been very narrative-driven recently. Link was one of them. Who knows where the Link Marines are now? Maybe that juice has been squeezed, right? Maybe that fruit has been squeezed for all its juice. In assets, in crypto in general, they can move pretty hard on sort of the viral nature of memes and narrative and even silly shit, right? You could see how the market gets silly during a state of euphoria and is moving for ridiculous reasons, right? When it's a really bad sign, when you have in a technically driven market with a lot of retail presence in the smaller pairs in an illiquid asset, okay, nonetheless, when your biggest people in the crypto market space cannot even get it to stop selling off, when you have people that have tremendous exposure in aggregate of, you know, if you combined maybe 4 or 5 of the accounts in excess of 250,000 followers, when they're tweeting things and making positive videos on the value proposition that this thing offers, and this thing keeps selling off, that's a fucking bad sign. You know, and just to be honest, you know, not pulling back whatsoever on the language, because that's a bad sign. Maybe one day this thing will be done and it'll bottom out, but this is the kind of thing that you wait for it to give you a lot of evidence as to that, right? A lot of evidence in favor of that, or that there might be a case for that brewing. When it continues to move down, these rallies are going to be looked forward to by people that have been the supply. They're really early people, and they're not people that get in right when it gets listed on an exchange. They're people that have bags of this. Their cost basis is so ridiculous that they can sell down here. And this, to them, selling this bump, they look forward to the bumps because the bumps are not where they are for you. The bumps for them are all the way up here, man. They're all the way up there, right? Their cost basis is this, okay? And all you see is this, right? That's why perspective matters. Charts, you know, charts are important with a lot of these assets because they can influence your decision making. And we play on that to a certain degree, right? But make no mistake, this is not good when your biggest people in the space cannot give this thing a pulse. So when I look at charts on TradingView, I try to find the one with the most price history and the best looking chart in terms of liquidity. So if you look at a chart like on some like Poloniex charts, some old school charts, you'll see that they look like, you know, you need to turn the resolution. You need to change the resolution because the coin will go to Binance list, for example. So we have, it's in, I put it in order actually. All right. We'll just find a quick pair on a 15-minute chart. Illiquid, okay, low sat. I want to find a, like, look at this Skippy price action. Okay, this is just an asset that probably has a 30%, you know, probably has a 30 basis point, 50 basis point spread. So WePower, right? Just look at this area. It's an ugly chart, right? This is what I'm just trying to say. It's not on a 15-minute chart, it looks like shit. So what I want to do is, if I could find this chart on its most liquid, if I could find this pair on the exchange that offers the most liquid chart, I'll look for that. And then the most price history. That's all. The most price history, because I don't want to be looking at a chart, you know, and let's say that I'm looking at WePower, just for the example, and I'm looking at this on XYZ exchange, and I'm thinking, oh, these are the daily levels. These are the most important levels. Like, we're basing out right here. You know, next target's up here. And then I'm not mindful of the fact that, you know, on every other exchange, it's this, you know, and the next daily levels is maybe, and this is actually funny, we pulled this up because this is at a pretty significant level. But if I didn't know this, right, let's say we were currently up here and I'm thinking, oh, we're close to a really important level, we're going to be basing out here, and no one else is worried about buying this, and they're going to step out of the way until we come down here. So I want the most price history. So should you. All right, so any other questions, guys? I can't believe I lost that train of thought. See, that's what you get when you're trying to give a $10 answer for a $1 concept. And the problem was, it wasn't a $1 concept. It was a $100 answer, and I was trying to make it $1 million answer instead of me just getting to the fucking point. So yeah. Okay. But right now, all correlations look like they are 1 to the upside. Nothing looks good though, alts-wise. I'll look at EG, whatever that is. And then we'll wrap it up if you guys don't have any other questions. You know, I like questions not about just pairs, but I don't care. I'll answer any question. Strategies are good though too, right? If you want to learn any specific way to use any tool, or, you know, my approach to specific things, always feel free to ask. Okay, so this is an ugly chart. And if I was going to be looking at this thinking maybe it was an asset I wanted to be in, my criteria would be at a minimum back above the more recent swing level within market structure, so that maybe I can make a case for this beginning to change. Ultimately, my criteria, and for members of BlockRoots know, it's all built around the weekly. For anything that's been failing for a long period of time, give me back the weekly level that it most recently lost. So for me, that would mean, and that means you're back above this daily cluster area. It would mean being above 661. And then at that point, it doesn't mean it's an attractive trade, but you have an argument to make, right? You have a case to be made, or there is a case to be made for maybe this putting in a short-term reversal. That's how weak other indices look to the U.S., like FTSE's dead cat bounce, dead cat Corona bounce. Yeah, it is kind of crazy how weak everything looks compared to the U.S. right now. Let's look at some of the indices. Okay. Okay, so, right. This is Euronext Paris, wrong exchange. Whoops. Did I just take something off I didn't want to take off? Do I just not have a... There we go. No, MIB. Well, we're just going to have to put a line chart on so it's not as ugly. Yeah, I mean, you got to look at the SPX right now is mostly driven by the internals of the top, the top four, top three assets, which are coming. You have to imagine Facebook is coming under fire recently. I'm not sure if we're seeing this. I'm not sure if we're seeing a sell-off in traditional markets because everyone's anticipating a Biden win, and it's that simple, and it's a matter of covering before the end of 2020. I don't think that. So, just my higher time frame opinion on the S&P right now. I think that when you have major events that occur, something like let's go to the SPX. When you have major events that occur going back to the 1980s, for example, so we'll go back to Black Friday or go to a higher time frame chart. So we're going back in the day, right? When you have major events that occur, and you have something like the crash in the 80s that led to the change in skew profile. So we're talking about, for those of you that aren't familiar, let's find the exact, okay. Nope. Okay. Why am I thinking of, am I just fucking up the name right now? No, there we go. No. Did I just ruin, what am I thinking of in the 1980s? Am I calling it Black Friday right now? That was going to bother me because I messed up the last name. 1980 stock market crash. But was it on a Friday? Did I fuck that one up? 1987. Okay, it was it on Friday though? Did I mess that one up? I mean, obviously it didn't begin. So obviously it wasn't just one day, but obviously a good amount of that crash occurred in a short amount of time. But it changed the skew profile of equity index options. So you change something like the skew profile with regards to puts being bid more heavily, and it just shows you how the market structurally changes in terms of risk measures and sort of how the market is pricing future movements and what the market anticipates in terms of risk, and the market adapts because of that. So I think it would be very unlikely for us to see a major cataclysmic sell-off like this, and portfolio managers, money managers, fund managers, higher frequency types not change their approach to now sort of model for this. So I don't think that we're in a position to have another major sell-off. I can't imagine the market having put itself back in, or kind of parked itself in a corner with regards to being, one, in a position of being overly leveraged, right, and being sort of crowded in these sort of carry positions. So I don't think that we're going to see any kind of major setback, but I could be completely wrong, right? Every other index, though, completely, I think, across the board underperforming the S&P, and it's something that I think that is par for the course. UKX, there we go. Let's see. Euro next. Ugh. Yeah. That is ugly. And you know what did really well the last few months? What was it? After the major crash, looking at the Argentinian emerging, where are we? I haven't used these lists in so long. Might not even have it on here anymore. That's what happens when you focus completely on Bitcoin now. We won't find it. We'll just add it again. Did I have it on? Oh, IAR. I think I did have that on. Oh, no, I didn't. Meanwhile, the IAR, which had that crazy drop-off going back to 2000, and that was in 2019, right? No, that was more recently. I'm losing track of time. Or was that back in... Because the other day I looked at a Bitcoin chart and I was thinking how I could remember times on the chart, what I was doing. And I was looking back at the Bitcoin chart and thinking, I got married in October 2019, but the China pump, that occurred after my marriage. I couldn't believe that. It was something that shocked me so much. But yeah, everything looks like it is underperforming the S&P. But the dollar, the S&P right now, obviously the S&P absorbs more optionality than anything else in the world. It is the carry trade to be in for the world. So, and if you want to learn more about that, read the book The Rise of Carry. It talks all about that. So it would make sense that the S&P is outperforming. Will the dollar be stronger in 2021? I'm not a macro guy. I love to sort of sit here and give my opinion, but I'm not necessarily certain. You know, we have certain ideas as to how the market responds given certain parties in office, and you know, you could say that Donald Trump being in office and Joe Biden in office might be good for Bitcoin because of, you know, Bitcoin can benefit by a strong dollar and it can benefit by a weak dollar. Do I think that the dollar is going to start rebounding within the next year? No, not necessarily. The dollar is obviously the world's reserve currency. The dollar is not going to just, I don't think the dollar is dying anytime soon. Got to remember to look at the camera. But I don't think that we're going to see any kind of major reversal in what the trend has been for the last 6 months. And I don't think, and I always have to say this as well, I don't think that if the dollar starts finding its footing up a bit higher, that it means that Bitcoin has to maintain this inverse relationship with it. I think I think Bitcoin has an identity crisis, but I don't think that that relationship is solidified. So when Bitcoin's outperforming, I look at alts and Bitcoin value because I don't want to be in something that's underperforming it. I'd rather do less work, right? Some people, I think, they look at the market and they're like, oh, what's moving up, and that's moving up more steeply is the better performing asset. And you know, if you're not looking at the Bitcoin chart, you might not realize that you could have probably been in something that is, one, more liquid, two, might trade a bit more in a technical fashion, and three, is actually outperforming, right? So if you're not looking at a BTC pair chart, you don't really get an idea of the immediate difference in performance between those pairs. So unless your goal is so if you're in a bear market, prioritizing, I always say, you know, I prioritize USD, you know, I prioritize the dollar, and, you know, you take profits into the dollar. As of the last 2 months, I've been keeping a lot of stuff in Bitcoin, or things that I've earned in USD, converting it to Bitcoin. In a bear market, I want to really prioritize USD because I am, you know, not a Bitcoin maxi, but I'm confident in Bitcoin. But if it starts losing weekly levels again and monthly levels, and it's approaching a pocket of nothing, then I don't care about the narrative. I'll buy at 10,000 rather than buy at 2,000. Or I'll buy at, you know, a higher price versus a lower price, and I'll pay that as just the cost of confidence. And I won't be, you know, thinking, oh, I'm earning more Bitcoin trading alts at that point. Funding rate for Bitcoin perpetual is negative for only one exchange on Binance. Rest all are positives. Does it mean more people are getting short? So the funding rate is just an incentive mechanism, right? But part of that is it does indicate what side of the market is getting more aggressive. So there's always going to be one for one, long and short on a futures exchange, right? But there are times when one side is more aggressive, when one side is using more leverage over a longer area or over a larger range. And this is where you get traders that get pocketed into a location. I don't like to think of too much beyond that. I don't like to think of liquidation levels and all that shit and imply that, you know, it has to mean that the market has to come back here to snag that piece of liquidity before it goes higher. I think that the market's more inclined to do that in ranging and chopping conditions when it's us just trading against us, you know, us meaning us trading against Alameda. But in a retail-driven market, in a spot-driven market, people that log on to Coinbase because they feel like they're missing out, they don't give a shit about your liquidation levels. They don't even know what a BitMEX is. As far as funding, though, you know, when we are getting really crowded in one area and the market is moving sideways, okay, and funding is beginning to either become more positive or more negative, then it is saying that people on the derivatives exchange are betting heavily on the future price, in that case being lower, or on the future price being, in that case, being higher. Now it's perpetual swap, so it's, you know, it's perpetual because it doesn't expire. But trust me, it's not something you should hold. If you're going to hold something, use a linear futures contract. But it does in that way, if the market's moving sideways and we see that funding is going negative, it's showing us that traders are betting heavy on downside. But guess what? I always try to put it as simple as possible. You're doing the work, but you're not getting any results. Okay, so they're betting against the market moving down. They're getting locked in a position. And if the market moves against them, you know, the pain at that point is to the upside in the case of negative funding. So some people look at funding and they'll say, okay, the funding interval is most important, if it's an extreme value. I like to just look at the range of price movement and how for that range, of that range throughout that duration of whether or not it's been a few days or a few hours is going to weigh maybe the intensity of the move or what magnitude I'm considering. But has it been persistent that we've had a negative basis? Okay, and by basis we're talking about the difference between the spot price and the futures price. Now in a traditional market, I always say this because you might listen to this live stream, go watch a legacy podcast and be like, he said a positive basis, they're saying a positive basis is this. In legacy markets, a positive basis is referred to as when the spot price is trading at a premium to the derivatives price. In futures, you see a lot of this interchangeability, or crypto, excuse me, where people will say, oh, there's a positive basis, and they're talking about the futures trading above the spot price. Just use the term premium and discount if it helps, and use the term that you're referring to, or the sort of what would you call it? Who knows? Cred would know. Qualifying term. So if you're going to say, all right, the futures are trading at a premium, whatever helps you understand it. So getting back to the point. So when the funding is trading consistently negative, I don't necessarily think, like there's people that are going to want to get out of position and they're going to get out of position all at once before the funding changes because they don't want to pay the funding, and at the same time people are going to buy right at that time. I'm not saying that it's going to happen at a specific point. I only say this because this morning someone asked me that. So they asked me, hey, funding's going to expire in maybe it was an hour or two. Are we going to see a move up or down? And I said, no, it's not. I'm not considering, the market is that dumb that it's just going to move at that point and, you found the most potent alpha at that point. I just worry about the fact that, hey, it has gotten to this point where it is negative. The open interest is still the same. So contracts are still open. And guess what? The price didn't move in, such and such intended direction. If it's negative, down. If it's positive, up. Then we have a case to be made for higher time for positioning being offsides. I obviously would like to see them, you're building a court case for something. In this case, it's a trade. You want to see the most, you want to see an abundance of evidence. So I want to see, we have all these exchanges negative versus, X, Y, and Z obscure outside of top 10 exchange that's negative. So Binance, the one thing about Binance, and I think that I'm just uncertain of how it works, is there's noticeable differences. There's a little idiosyncrasies between Binance and other exchanges, because Binance, and I think a lot of it comes down to, doesn't reward it. And this more so affects CVD, so we'll maybe save this conversation for another live stream. But what I was going to say is the aggressive order flow on Binance is different because passive market makers are not rewarded with market rebates. So there's actually not much of an incentive to not be a taker, so it leaves you with this wonky CVD. So yeah, anyway. All right. Trump all day. You know what I say? Listen, I just want this to be over with, man. I just want this to be over with. I'm willing to say that no matter who's president, it's such a tough job, and you're going to be made to seem like, the devil to one side, the angel to the other, and I wouldn't want the job. And I would say that it's an unfortunate place to be in if you're not favored by the majority. I wouldn't want to be in that position. I just want it to be over with because it's, as much as I don't want to sound like I'm too detached and, I don't know. Someone put it yesterday. I said that it's not going to affect me. It's not going to affect how I treat people. It's not going to affect how I go about trying to accomplish the things I want to accomplish. And I don't think you should let it. And of course, policy changes might have a direct impact on your life. And of course, I'll be paying more taxes. But I think that everything is a matter of perspective. My back is getting tight. Everything is a matter of perspective. Some people look at something like motivation. Some people look at it as a reason to quit. And it's just, it's fuel. So if you look at, you could say, woe is me, you're going to pay more taxes. Or you could say, going to pay more taxes, got to step up my gains so that I don't realize that, or so it doesn't change my maybe standard of living right now. So I think that you can use anything and spin anything, depending on what kind of person you are. What's the saying that, whether you can or you can't, you're right either way, right? Whether you think you can or you think you can't, you're right. So I always try to stay as positive as possible. And my president is, doesn't have to have as much of an effect as maybe everyone assumes that it will. Even though the world is obviously in kind of a shitty spot right now. But that is life either way. You know, empires rise and fall, and that is the truth, right? That is the long-term trend. We're getting stuck in the short-term price action, maybe. Okay. Ripcord, what about liquidation clusters? So many 100 times leverage longs off sides. Yeah, you know, there's some things that I think are just a little silly because they sound a little bit too determinist, like they're deterministic. Like you know, this, we have these shorts here, there are these 100-time leverage longs here, therefore the market has to do this. And I don't know, I find things like that to be a little silly. We'll just say that in a friendly way. Contango backwardation. Well, contango and backwardation have to do with futures term structure, which is more about the entire structure rather than, that's more about the forward curve versus, so there is a lot of interchangeability within these words in crypto, and you'll see sort of certain jargon get used, maybe with less strict, I guess, application than you would see in legacy markets. So someone will say, you know, perps are trading at contango to spot, and I'm thinking like, no, they're not. You know, perps are the front of the futures curve. You know, perps are front month essentially. And in traditional markets, you know, your front month is where most of the activity is. Unless you go further out in the curve on certain things where there maybe something like oil where there might be a lot more activity further out in the curve. But you have futures curves that go beyond 6 months, whereas in crypto it's like long-term futures are short-term in traditional markets. May the best puppet win. Gonna pay more taxes. Time to find a better accountant. Yeah, I don't really mind about paying more taxes, honestly. I do, but I'm not. There's nothing you could do about it. So there's this great diagram that is created, and it's, I can't remember exactly which one it is, but it's sort of like, can you change the situation? No, then fucking stop paying attention to it, right? Can I change the fact that I'm going to be paying more taxes? No, then put that out of my thought process. Like, you can't do anything about it. I think that if there's one thing that I've been able to do in sort of the latter years of my life is to be really, one, clinically objective, and to really, I guess, be able to, I don't want to say divorce these things completely out of my thought process, but if it's not helping me and there's nothing I could do about it and I have to live with it, then it is what it is, right? And I'm not going to dedicate any energy towards trying to contemplate it any longer than is necessary. Give things about 5 minutes time to harp on them and then fucking keep it moving. Puppet comment. All right, so I think you guys have asked a few questions and we've gone over what we would need to go over. You know, for the sake of not just being redundant and going over alt pairs because it is, you know, in fashion, I just want to say, you know, I think alts are all shitty right now. And I think that if you get an alt right now, you're going to get hurt. I think that maybe in the long run, you might get lucky on some of them, but I think that in the short term, that they're not in a good position to, one, to find risk and to find any kind of base. I think that Bitcoin is sort of in a spot where it's in a touchy spot. And if it moves up or if it moves down, alts are not in a position to really benefit. And if they are in a position to benefit, they're the ones that you're not in already and that no one else is, and people have forgotten about, and they're not selling either way. So the outperformance is a lack of activity relative to something that's dropping. Zcash charts. Zcash, right, has a halving. Oh, a tip. Use a, what is it? Okay, looking at my phone. Sometimes if you can't really figure out what the trend is, use a line chart, right? I talk about using different types of charts on my own because it just helps me to find structure. A line chart is something that's useful. Zcash, is it doing anything right now that makes me scream out and buy and say I want to buy it, other than maybe that thing that everyone knows about now, the halving, which of course is going to have an effect on how that supply hits the market, right, or how much. But from a structural standpoint, I don't even want to go to a monthly chart at this point because I don't think anyone is looking at Zcash's monthly chart. And I only want to know other levels that people are, if I am using a level in Bitcoin, it's because I think that a lot of other people are as well, and I just have to know that it exists. Sort of like, oh, be mindful of that over there, there's wet paint. Okay, be mindful of that, the monthly levels there, and it'll be the time that I don't have it marked, that'll be the first sticky point, and I have, you know, target at 14K, and I'm thinking, why the hell is price stopping here? Why is it sticky right here? I thought this was going to be a point where it accelerated, and lo and behold, it was a monthly level, and I didn't think about it. And you know, if I think about these things beforehand, it really just helps the process when I'm in the trade. But on a chart like this, on the higher time frame chart on Zcash, you know, if I'm just going to be paying attention to the more obvious swing points, I ultimately would want to see, you know, you have this degree of consolidation up here back under this low. So a loose area, right? I would want to see that this area acts as support, but best case scenario would have been treating this top side. The greater, so oversimplify things, right? For your own thought process. If this is very bullish, should a pullback be deep or should it be shallow, right? So I'd rather be shallow, okay? So this area would have been a better area to maintain support. Immediately we came back and checked this area as resistance. It did a great job. So why didn't it do a really good job as support on the way down? All right, if we look at it, we had this sort of 3-drive structure, which for me is actually out of the sort of book of setups that I, by this point, you know, those are really old things to pay attention to. But one of the books of setups is this 3-drive structure. Same concept of trap traders. You usually build up some OI down here. When we're starting to trade back above more local market structure, I'll try to anticipate this more often than not, and I'll more often than not be rewarded for that occurring to the upside. So when you have a 3-drive structure into support and you fail, and then you get a very clean and nice retest of the last higher time frame level, and it's not in favor of the bulls, all right, I'm not maybe going to be adding too much weight on this support acting as support. You know, think of why the concept of engulfing matters, okay? You just did this, and the market said, fuck you, and did that. So if that was all your progress, the market just kicked your ass back down the hill. So Zcash to me doesn't look, it doesn't look that attractive. I was, right? But I was bullish on this because of the halving. This is going back over a month ago, and I talked about a spot position in Zcash, but at this point, you know, price action is not doing enough, and this kind of just fell off the radar for me. Some things just fall off the radar, and you guys know that I'm not someone who's been very interested in alts, period. I get interested in them for 2-3 weeks, and that's it. And I'll be the person who gets left behind when we finally take off on a 6-month trend, but it doesn't hurt me to continue to go about the way that I'm doing things now. You know, I was able to print a good amount of money with the DeFi rush, and I was late to that. So, but I know when it's too late, at least. But what was I saying? With any kind of, so if something's bullish, it should show up in the chart. It doesn't mean that the chart shows everything. Okay, that over sort of parroted Bernard Baruch statement that show me the charts and I'll show you the news. No, that's not the case. Okay, for anyone who does that shit, there's so many times when I want to tell people on Twitter, like, dude, you don't know what the fuck you're talking about. Okay, there's so many times when the market doesn't reflect what's going on. You think that everyone just has privy to this information and, you know, it's hop on boys? Yeah, a certain amount of people, but the market doesn't reflect everything. Now, when something is bullish, all right, and it's known well in advance, I want to see the market continue to maintain bullish market structure. All right, and for me, structure is very important with alts, and it's higher time frame structure. All right, guys, I think this is wrapping it up, though. We're about, how far into this are we? We are 1 hour and 50 minutes, so kind of long. And we're for Bitcoin. I just want to go back to Bitcoin. Spot trading at about a $12 premium right now. And on this pullback, I just want to see a reaction down here. I'm not going to chase it up here. So not going to chase it up here. You know, let's say, so where would I maybe chase this for another long scalp? So for example, in the 4-hour chart, let's say that we get something that's back within this range. And let's just make sure that we look at this range from the ways that we teach. BlockRoots. Okay, so I'd say that that 4-hour level is significant, but if we start, so we're reversing right here, if we start gaining acceptance back within this prior range, I would be happy to take a scalp long back up to the high. These are small bites, right? The idea is previous consolidation. All right, we've done away with it as acting as any kind of underside retest or doing its job to maintain bearish market structure, if that's what you, if that tickles, you know, your fancy. And if we gain acceptance back within this, then I'll look for the long back up to the high. The problem with that is theoretically that'd be awesome, but a lot of the times what happens is if we gain acceptance back into this level, this doesn't occur, right? If we gain acceptance back into this level, this occurs. So we'll see. Maybe we'll get that set up, but then maybe at that point, and then maybe at that point, it's just the case isn't to be made for the high. Maybe at that point, it's just the test of the more recent high. And then, yeah, it's fine if we do get the sort of slight moseying on into this level, and then you test the high, and then we range and then roll back down. Bitcoin dominance on the up and up. Yeah, you're seeing punishment across the board with even something like DOT, which just shit the bed in terms of that level. So what are you going to do? Doing the membership giveaway. So we did the membership giveaway on the last video. So if you go through the comments, you'll see. So we'll go through the comments right now to show you one. Just to show you we're not making this stuff up. So YouTube. Okay. And now let's see. So Sweet Canary, you won. Check. Okay, Sweet Canary, you responded. Cornholio, check. Cornholio, you won. I know you're in here. Pascal, I already spoke to you. Check. That's 3. And then Eugene or Eugen, check. I don't think you're in here, but I'll figure out a way to get in touch with you. And then Frabbit, XBT. Okay, so I see that there's 2 people that have not responded, or 3. But we'll find you. We don't just let these things go without being rewarded. We won't do another one until we make sure that the right people that won receives that. So during this one, we're going to give away $100 in BTC. Okay. So we're going to give away $100 in BTC. And let's see what the question is going to be. This is going to be trivia. Okay. So this is going to be trivia. I really like this one. I think it's from the book Thinking Fast and Slow. So I've said this so many times. So if I have a I'm going to try to change up the words. If I have a patio, okay, if I have a patio, it's a patio, right? It's a patio in your backyard. I have a patio, and there is an anthill on the middle of the patio, okay? Now, the anthill doubles in size every single day, all right? On the 73rd day, the anthill is the entire size of the patio, took over the damn patio. This is down south in Florida or in Central America. So the anthill took over the entire patio on the 73rd day. Okay, it doubles in size every single day. On the 73rd day, it took over the entire size of the patio. On what day was it half the size of the patio? Okay, Malcolm Gladwell. I read most of his books. Outliers was good. Those are good books. I call those airplane reads because you could read them on a single airplane flight. My indicators, my personal indicators. Thank you, Ripcord. You got it. Cool. Ripcord 1, 72nd day. It doubles every single day. So on the 72nd day, the day before. All right. So, you know, to the fast go the spoils. All right. So Ripcord, you won $100. I think you won this week also. So that's another $100 for you. Okay. So what was I gonna say? Oh, indicators. I don't have any indicators. I have custom indicators that I made for BlockRoots members, and there's nothing special about them. They just put a bunch of other indicators together, and I talk about this a lot. So the Clark indicator. This has been around for now. I've had this for 2 years now, and all it is it's a moving average, it's ATR bands, and it's a above average volume indicator. So when you put on the Clark indicator, shows you when you're sitting above the 20 period. It's kind of a standard line of control. It's a center line on most of your standard deviation bands. I think Donchian uses it, Bollinger Band uses it. 2 standard deviations away from that will be your Bollinger Bands. 20 moving average right now. When you're above it on your 4 hour, on your daily, whatever it is, you're green. When you're below it, you're red. You know, it's a good tool to. What you should always have with any approach is some sort of dominant filtering mechanism. What do I know immediately, or what do I refer to immediately to decide Am I looking for the long or the short? Is this the best opportunity for the long or the short? Right now in this condition, I mean, you've known for the last few months I've been beating this horse about, my wife hates when I say that, about just looking for the long over the short. But, and then it shows standard deviation bands. This is ATR bands. You can change this based on the setting, right? Multiple of ATR, and this is good for a stop. So if I want to know where to put my stop, and I'm trend following, I'll put 2 times ATR, 1.5 times ATR. And then the other thing is weekly open, monthly open. All right, and then volume above average. So what this does is it shows me, let's say we're looking at the daily, shows me where our above average volume is. And this is, hopefully this is on a 50, which it should be now, not on a 20. It is on a 50. This is just showing me what your volume indicator would show you if it had your moving average down there under the volume bars. It's only showing me the bars that are above average. So I would want to see, and this is just, this tool was made for BlockRoots members as a tool that they could use to sort of, again, filter out things immediately. Oh, we have a breakout. Okay, is there immediately above average volume? Great, okay. Oh, we're above the 20 period. Okay, I'm going to start looking for pullbacks, etc. It's not a tool that I really look at too often. I do look at the 20 period in trending conditions, but a lot of the time I have a feel for these things either way. You know, I'm picking up on them in other indicators either, you know, regardless. Okay, and then other indicators, I don't use indicators. You know, I use tools like this TPO box. It's just a way of organizing data. It's not an indicator, it's not a strategy. So go to ES, ETH, we'll go to Phemex chart. Basic candle setting. It's not basic. I use a 5 million volume or 500,000 volume candle setting, depending on how fast we're moving. Just cleans things up, shows me where the volume came in, not where we were printing based on time. Have my VWAPs to see where most of the market has been putting on risk. Then I have my footprint. Last thing I look at just to see if we have a ton of aggressiveness into that low. If I don't see something on CVD that maybe makes it more obvious. If I see it on CVD, a lot of times I don't need to look at it on this. This is also good because in faster moving markets during periods when we're momentum scalping or trading momentum on the low time frames, once we start moving up to the highs and you start to see that the bid starts dropping off and you start to have these zero prints, it just tells me that the book is not willing to walk up with price. And then this tool, just a data organization tool, just takes the day's data and puts it into a distribution so I have some idea of context. Balanced structure, imbalanced trending structure. You got a bunch of balanced structures together. Why should I care too much about this point or that point or this point when I should really know what defines the balance, right? If we're moving within 4-day structure within the same $400 range, I don't care about the extremes. I want to know where fair value was in the center. So then I could say, all right, buyers and sellers have been most willing over here. I don't want to get in position over here because that's where the most liquidity is, which makes it kind of like bait. But it's also where you could get flat-footed because in a range, you might just end up mean reverting. Right, so I take a position off of here. What's to say that it's supposed to go up before it goes down? Right, so it's just a way of looking at the market, I guess, from I think it makes it a little bit easier when you're looking at a chart like this to start off with this. And I've been using this. I was using this when I was trading the ES, using this when I was trading crude oil. And again, this is not something that was as available in crypto. And earlier on in crypto, I was just using volume profiles because underneath here, you see that's a volume profile on top of the TPO. And then other than that, I'm just seeing, you know, current context, and then I know where, hey, if we're up here, this is an area where buyers and sellers haven't been too interested. If we have absorption, some type of auction above this level and acceptance, you know, maybe we have a case for a breakout. There's a lot of other things I look at with this. I look at the average sub-period rotation. I know that when we hit 20, 25, 29, 30, 35, that's typically the end of the range. Typically ranges are 3-4 days long. Sometimes 5, and they could obviously be longer than that, but I know that towards the tail end, the signs that I look for are those values in the 20s and the low 30s. I'm trying to think of some other stuff. I have an idea of what the standard deviation is for the TPO value area range, the volume value area range, 220 for ranges, 230 for ranges for volume, 55 to 65 for average sub-period rotation. One standard deviation is 15. Okay, I think that covers it. And yeah. So anyway, I know who to give the money to because that is Cord and he was just in my DMs, but I think that about does it, guys. Thank you guys for stopping in. It's been a really long stream, but I think it's been a good one. And I look forward to doing these more frequently. Tomorrow is the crypto and coffee stream at 9 a.m. And if Crypto Cred is here, he's the only one, the only person that I watch on YouTube. And phenomenal. There's something to be said for someone to be eloquent and be able to communicate effectively. Language is so dangerous, and being able to communicate well is it's such an edge. And I think that I don't know if I've ever seen anyone communicate ideas so succinctly, and he's definitely a very cerebral person, so you have a lot to learn from him. And listen, when people ask me how to trade, I don't say sign up for BlockRoots. It actually makes me cringe to learn how to say that. I rarely advertise it. I stopped doing that. I tell them, listen, man, there's a ton of free shit. Use the free stuff. If you could learn for free, that's awesome. You're not going to learn either way until you actually start putting money on the line and dealing with all those other things. But there's no one source. I'm constantly learning from people that I didn't even think that I had anything to learn from years ago. Then maybe I would have written off, and that just shows you shouldn't write anyone off. Okay, you have something to learn from everybody, and there's definitely more than one source. I can tell you that 99% of the stuff you see on YouTube right now is complete dog shit. Complete dog shit. So yeah, that does it, guys. Everyone have a Schiller. I've heard he has a good stream as well. I try to only watch. I watch just a few things, and Cred is really the only crypto guy that I'll pay attention to when it comes to the streams. But everyone have a fantastic morning, evening, and night. Until next time, until tomorrow, take care. That does it. Let's see if I could cut this scene in a nice way. And